Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, the sun is out as we enter into another bank holiday and the first weekend of May, Curtis. So how time is flying, but I think a lot of the retailers listening to us this morning will probably be hoping we get through these bank holidays and back to some kind of normal trading with the late Easter and the bank holidays at the minute. But it's nice to have the nice weather.
Definitely. I mean, these bank holidays are coming thick and fast at the moment, aren't they? I must admit, I'm enjoying them, but I don't envy anyone in the car retailing business who has to sort of manage their opening times, staff being available, and also, as you said, the good weather, because if the sun's out, then the chances of footfall coming down is very high, isn't it? Because
yeah. I think people are describing the market as fairly subdued. I think some of the conversations I've had this week is looking at, markets slightly down compared to the same period last year, but last year was a totally different market to what it is now. And as I said before, late Easter, double bank holidays, bit of nice weather as well. In addition to all the economic and geopolitical activities and shenanigans taking place, we're in a slightly different marketplace. But I think it'll get through it and it'll start to pick up. And fingers crossed, we'll get a base rate reduction next week from the Bank of England. Whether we get 0.25% or 0.5% drop is yet to be determined, but hopefully that'll stimulate a bit of buying activity on the back of that. So look forward to that one, hopefully.
Yeah, definitely. And we'll start with a shout out this week to all the winners and finalists of the AM Awards. What we'll do is we'll have a roundup of some of the winners on next week's podcast.
Yeah, definitely. So congratulations to obviously everybody nominated and shortlisted and winners to the AIM Awards. I know it was on Thursday night of this week following the NFDA automotive event, which I know JudgeService are also involved with. So that was, I know Bill Berman was speaking and Paul Philpott was there speaking as well. So I think we'll give a shout out next week on that one when we get the results. But the other shout out this week is if you've not had chance to listen to it in your podcast feed, we caught up with Jeremy Yea, who's Cap HPI's senior valuation editor there at Cap HPI. We had a good chat with Jeremy about the performance and activities through April, particularly around the live values, and talked a little bit about the market in general, demand and wholesale activity, but also in detail around the values by fuel type and by sector. But the fuller podcast interview is on your feed, your podcast feed. But we do have a short snippet of that today for you after this morning's headline roundup that Curtis will read next.
Headlines this week come from Motor Trade News, Car Dealer and AM. And as you say, Phil, we'll start this week's pod with a look at April's used car trends from Jeremy Yea at Cap HPI. And we'll follow that. We'll keep with used cars and we'll follow that with a look at retail trends with Motor's latest market view reporting that used cars actually sold faster in April as dealer stocks grew. Then we'll take a look at VW Group because they're in the news this week. Firstly, with it confirming that it's pulling the plug on agency. And secondly, with Volkswagen Financial Services, one of its subsidiaries, announcing or confirming that it's closing Heycar, its online marketplace. Then after the break, we'll take a look at Group 1's eagerly anticipated Q1 results. Why they eagerly anticipate it? It's because they're the first quarterly figures following last year's acquisition of Inchcape Retail. We'll look at some JudgeService research, which finds that after-sales customers think it's fair for dealers to charge for extras, such as courtesy cars and valeting. And you can now add Skodas to the endless list of stuff that you can buy on Amazon.
But as I say, before we take a look at this week's headlines in a little bit more detail, here's the short extract, as I mentioned earlier, from the interview earlier in the week with Jeremy Yea's CAP HPI Senior Valuations Editor talking about the April trade values. In the intro there, Curtis talks about price stability in the first quarter, trade values, etc. But let's talk about what happened through the headline numbers to start off with at that 3-year 60 mark through April.
Yeah, so at 3-year 60,000 miles, it did drop 1.5%. I recall myself saying the prediction at the end of the last pod that we thought it would be anything between 1% and 1.5%. So thank God it didn't go over 1.5% because I would have looked a little bit silly. So it was more or less, it's in line with our expectation, to be honest. And 1.5% down at 3-year 60 and around £275 overall across all the sectors. So, yeah, like I said, in line with expectation, in line with seasonal deflation. You said it just now, Easter being late. It's been, very seasonal is probably the best word to describe it overall.
And how does it compare with previous April months and periods?
Well, so the seasonal average is a 1.6% drop if you exclude the COVID-affected years of 2020 and 2021. Obviously, 2021, everything went crazy and prices rose significantly. So if you do remove those, it's 1.6%. So we're on the right side of it, on the slightly stronger side of the seasonal average. Last year went down 1.5%. 2023 went down 1%. And then if you go back before pre-COVID times, we had 2019. That was off the back of a strong year of 18. That went down 2.3%. And then if you go to 16, 17, 15, around 1.6, 1.4, 1.7 is the normal. So it feels very, very like more normal times. And it's difficult to remember those normal times because it feels such a long time ago. But we've just definitely feel like we've got back to those seasonal norms and away from any sort of, I guess, disruptions.
And we mentioned Easter, and you track, we're talking monthly figure there, but you actually track the market on a daily basis. I mean, how much did that Easter period, that Easter break, influence the values? What happened through that trading period?
Well, so the back end, if we go back a little bit further, start with the back week, last week of March, we started to see a slight softening in the market, but only ever so slightly. And then as we got into April, and bearing in mind the April school holiday period started first week of April, that week commencing the 31st really, and there was sort of staggered holidays across the country, a 3-week period. So that disrupted things. So we saw values drop ever so steadily, sort of 0.1, maybe 0.2 on a couple of days, but generally 0.1, or we had the odd day where it stayed flat. So it sort of got to the 1.5% very steadily. So there was nothing untoward, and it was just in line with, like I said, within our expectation, and nothing fell off a cliff, which was a relief for everybody. Nobody wants to see values fall through the floor. So it's just been, it's been pretty good overall.
And your editorial this month, Jeremy, reports some pressure across all the age and mileage profiles that you track. Can you take us through what you were seeing on CAP Live?
Yeah, so it fell at all age and mileage points. 1 year 10k, it dropped 1.2%, which is roughly about £385. 5 year 80k dropped 1.6%, about 200 quid. And then 10 year 100k, that dropped 2.1%. So that's about £95. So, it is steadily decreasing, I guess, across all age points and mileage points.
Some great insight there, as ever, from Jeremy. And it is worth listening to the full interview because he does go into a lot of detail about the various vehicle segments and, of course, fuel types. Because one of the interesting points he made, Phil, that really caught my ear was that if you were to strip out the fall in EV values, it would have been a fairly flat month in terms of price movements.
Yeah, and I think that was the clear detail. And I think sometimes we were always talking about the devil in the detail, but the EV market is generally weak, but that EV market is also being driven by certain makes and models of vehicles within that sector, which has dragged down, one, the EV sector overall, and two, the overall market there. So I think these conversations with Jeremy and the CAP HPI team really sort of bring out the detail and the context behind some of those headline figures, because they don't tell the story, do they? But we did give him the option this time of giving us a gap, a sort of a bit of a broader view of where he expects the values to go. But it was all right. He kept within the 1.5, didn't he, for last month in terms of his prediction? But I'm not sure he's quite as confident for the next prediction, was he?
Yeah, we'll hold him to account next month.
And to begin with, we'll get over to the headlines now. And as Curtis said there, we'll stick with used cars and we'll head over to Motor Trade News. And that used cars selling faster as dealer stocks grow in April, saying that the average used car price stabilised around 17,500, while vehicles sell in 28 days, the fastest so far this year. Now, this comes from the Motors market view, but as ever, there's a lot of detail in this report, isn't there, Curtis?
There is indeed, and I did work with the Motors team on this press release. I did see the data, and as you say, average prices increased slightly to just over £17,500. So it tracked at 17,541, which was up £134 or 0.8% month on month. And that's £154 higher than the same period last year, with prices consistently hovering around that 17,500 mark since last October. So it shows how steady the market is. And it does reflect actually what Jeremy was saying about that stability in the wholesale and in the trades markets. We're seeing this in retail as well. And as you say, dealers achieved their fastest sales of the year so far in April, with used cars spending an average of just 28 days on forecourts, and that was down from 30 days in March.
Yeah, in a little bit more detail, talking about franchise dealers and obviously with the March part exchange marketplace, saying that it experienced the most significant inventory growth with part exchanges from the new 25 plate introduction, boosting stock by 11% from 55 units up to 61 units, and that car supermarkets increased their inventory from 142 units on average to 149, whilst independents saw a slightly more modest rise from only 37 units up to 38 units. And there's a nice little quote in here from Lucy Tugby, who's the marketing director there at Motors, saying that April saw a continuation of the trends that they've seen now tracking for several months, with dealers benefiting from a market of stability and strong prices, and saying that although the late Easter break and school holidays inevitably took some used car buyers out of the market, dealers remained active online and were rewarded by faster sales of the year so far, as Curtis has just pointed out there.
And moving over to Car Dealer, the next story, the headline there is Leaked Memo Reveals VW Group has pulled plug on agency sales for all brands, including Cupra. So this is a bit of an ongoing saga, isn't it, for VW Group? Because, certainly as recently as last November, VW and Audi paused agency sales, and this is confirmation that Cupra, which I think is now the last brand that was still operating under agency, has also been paused. And we use the word pause because that tends to be the word used by the OEMs in these cases. So agency may not be right now. It may be something they revisit at some stage in the future.
Yeah, giving that indication that it's not gone yet. In what form will it return now? And like you say, we obviously talked a lot about VW Group previously, not going to agency, but this is the fact that Cooper was already under agency at that point when they stopped everybody else going to agency. So this is the reversal of the Cooper brand under that agency banner. So they're saying that in a bulletin to the dealer network, Damien O'Sullivan, who's the managing director of VW Group UK, told dealers that it was changing its plans to reduce the complexity of having different sales models working in tandem, and he said that the industry is in a process of transformation and that VW needed to cater for the needs of the customer. I think, just in those couple of sentences there, clearly stands out, reduce that complexity, process of transformation, and cater for the needs of customer, really playing into the current marketplace and the challenges that retail sector currently face.
Yeah, because it goes on to say that VW had been selling electric vehicles under agency sales agreements, while at the same time retailing its ICE vehicles under the old franchise model. So there is a bit of sort of backroom confusion there, which is obviously what they're referring to as part of this complexity, selling different cars from the same showroom under either agency or franchise. And the memo that was leaked to Car Dealer actually goes on to say, and this is from Damien O'Sullivan, you will be aware that other brands as well as Audi recently took the decision for the short to medium term to move back to wholesale, thereby reducing the complexity of the dual distribution model, which currently exists with ICE and BEV products being sold under different frameworks. So it really does clarify where the issues were with applying agency to their various brands.
Begs the question of what cost does all this come
Yes,
at? Is the costs incurred for the work when they initially split and decided to do the agency model? I think, is it called a Chinese wall, where they have to put a sort of a gap between the agency sales team and the manufacturer and things like this? The cost and the complexity of doing that, and then reverse engineering all of that must be expensive. What that looks like on the balance sheet there, but I'm sure that might get leaked at some point to the car dealer. But we'll keep an eye on that one. But
there must be some DMS systems that are sort of absolutely creaking under the pressure. There's a lovely sign off in this story from Car Dealer, because they look at some of the other brands that have looked at agency, including Stellantis, which had planned agency sales for its brands, but has really pulled away. And Ulrich Druce, the managing director of Stellantis, saying that it's not a priority anymore. And it goes on to say BMW and Jaguar Land Rover have also paused their plans to move to agency, while Mercedes and Volvo have continued. And they're actually doing rather well in terms of sales, because last year Mercedes saw sales rise by 17%. And Volvo's sales increased by 32%. How much that was down to agency is anyone's guess, but it's showing that they are achieving some successes there.
Yeah. So sticking with VW, but heading over to AM Online and looking at the VW Financial Services. So this is the VW Financial Services, VFS, have pulled the plug on Heycar as a business winds down. As the business winds down, they're saying this is the VWFS has confirmed that it's winding down its Heycar marketplace division, and saying that the VWFS, which is Heycar's majority shareholder, said that the technology and expertise developed by Heycar will be rolled into a new subsidiary in a strategic move that underscores VWFS's UK commitment to innovation and enhancing their technology capabilities. Now, I think this came as a bit of a shock. I'm not sure how well Heycar were performing financially as a marketplace proposition. They're obviously not one of the top players in that place, but quite a significant move this from VWFS to pull it, but obviously maintain the technology side of it.
Yeah, and there's a quote from a spokesperson who does actually confirm this to AM, and they say Heycar has been a pioneer in the online used car marketplace, and despite the decision to wind down their operations, the valuable insights and digital solutions developed so far will play a crucial role in the future of VWFS UK as we continue to explore new ways to drive growth and innovation in the automotive e-commerce space. And the piece does actually go on to say that VWFS declined to comment on when Heycar will be closed, but AM says it understands it will be before the end of the summer.
Yeah, a bit of a shock to the sector there, and obviously saying that it was formed in 2017 in Berlin with the backing of obviously VWFS alongside Daimler Mobility and Volkswagen themselves. So a bit of a shock to the sector, that one.
We'll be back with the rest of the week's headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So heading back to the headlines now, and we're heading over to Car Dealer and looking at the financials from Group 1 Automotive that they've covered this week, saying that Group 1 Automotive more than doubles its UK profit in the first quarter of 2025, saying that its operation was up by 109% through its UK business there. Revenue also nearly doubled in the UK, up by 92%, and that acquisitions in 2024 and so far this year have nearly doubled its footprint in the UK. They're saying that, so that's the profit in the UK arm of Group 1 Automotive, saying that it's doubled its profits in Q1 2025, as I said before, by 109.6%, and that has taken the operation to 162.9 million. So that's a very strong turnaround by the business in the UK.
Yeah, pretty impressive results here. And of course, it does include, as we said at the top of the show, its acquisition of Inchcape Retail, which happened August last year, and added 54 showrooms to the business. And also towards the end of last year, it added 4 Mercedes-Benz sites from Mercedes-Benz Retail. So the group has grown enormously over the period, and this is the first quarter to reflect that growth. And as you just say, there's some pretty impressive figures here.
It is, and you wonder how much, because it was covered in February of this year when there was an announcement saying that they were pushing ahead with a 37 million UK restructuring cost-cutting program, and this was like a phased, I think it was a 5-phased program there, saying that in 2024 it's phase 1 and 2, it cut costs by 15 million, and that was through a reduction of jobs and other areas within that senior franchise operation there, and that they're now moving into phase 3 this year, and again that will result in further headcount reductions and cost-cutting exercises that will save them another 22 million, and that is expected to be completed by June of this year. And I think it was only last week, didn't we, reported on the sale of their Manchester operation as well. So there's a lot going on in that business. But to be fair, you look at that Q1 results, it's certainly paying off in terms of that profitability and return to the business.
Yeah, and as well as that sort of rationalisation that's going on, the story does actually mention that so far in Q2, the business has also acquired a Lexus and 3 Toyota dealerships from Johnson's Cars. So it's still on the acquisition trail, but it clearly is looking at its portfolio and reshuffling the pack somewhat.
Yeah, definitely. And heading over back to Motor Trade News, and this is from a survey from JudgeService, saying that customers find it fair to pay small fees for after-sales services. Now, I suppose the question is, and it's very difficult on the Motor Trade Radio podcast, bearing in mind our geographic readership, Curtis. I'm sure everybody's connected to the automotive sector in some way and probably wouldn't expect to pay for any of these services. But the question is would you pay for, as you said to me before the show, would you pay for somebody to collect your vehicle? Would you pay for that your vehicle to be valeted whilst it's in for service, etc.? And would you pay for a courtesy vehicle whilst your car was in for servicing? Well, JudgeService asked those questions to the customers.
Yeah, and whilst the uptake, I mean, we don't know what the uptake is, but customers, more than half of franchise customers, and this is where the research is interesting. And I did work with the JudgeService team on this, because what they did was they researched 500 franchise customers and 500 independent garage customers, and they found that more than half of the franchise customers said paying a small fee was fair, compared with 22% who said it was not, while independent garage customers showed a similar acceptance, with 53% believing it was fair and 20% disagreeing. But courtesy cars were judged to be a fair chargeable extra by, again, 46% of franchise customers, although 28% disagreed, while independent garage customers showed comparable sentiment, with 44% saying it was fair, although a third disagreed. So it's quite interesting how sort of fairly closely matched franchise customers are to independent customers. And the question is very much around, is it fair for dealers to charge extras for, as you say, courtesy cars, balloting, and pickups and drop-offs?
Because, I mean, at the end of the day, there is a cost incurred to the dealer, whether
Yeah.
you're a franchise or independent. There's a cost in terms of valeting that vehicle. One, the cost of doing it, and two, that efficiency cost, because if they're valeting your car, they're not valeting somebody else's car. So there's all this that plays into it. But there is a nice little quote in the article here from Neil Adley, who is the managing director there at JudgeService, saying that despite the ongoing cost of living crisis, the research does show how most customers value being offered low-cost extras that ensure convenience when their vehicle and their cars are being serviced, and saying that overall, after all, a customer there have become used to paying for upgrades on their mobile and streaming packages. So their message to the dealers is that there is an opportunity to recoup some of those costs to make the after-sales experience as smooth as possible, but to do it in a measured way to keep customers on side, and that this could be an add-on on the day or a slightly premium payment on a service plan. So, very strong message there to the dealer network that in these times of challenging profitability with everything going on, there is opportunities for them here to, offer services and expect to get, some kind of return on that cost.
Yeah, definitely. Which brings us to the last story of the week from Fleet News, and the headline is Skoda to offer real-time vehicle availability through Amazon showroom. So this one actually went live during the week, and you and I have just been onto the Amazon website, and we've checked it out, and it's not a bad service, is it? Because basically what it is, it's so if you have an Amazon account, just tap in Skoda, and you'll be presented with a page that takes you to what is pretty much a microsite, which will just list the availability of new cars in the Skoda network, and you can drill down by model, by price, and then you can do it by postcode. So identify your nearest dealer. But when we looked just before recording this, there were just under 4,000 new cars available on the website.
Yeah, I mean it's a great. I mean, obviously we've been talking about this in this rollout in the US, isn't it? Through Hyundai, through
Yes.
Amazon. There, slightly different proposition, but I think you're right. This is a significant, big move by the manufacturer and this partnership with Amazon. And I think we've talked about this for years and questioned whether will consumers buy a car through Amazon. And particularly, will they buy a new car? Will they buy a used car through Amazon? But I think this first stage of being able to match a buyer to a retailer and offer this, doing that whole, I mean, it's a very slick site, isn't it? When you look at it, it's, focusing at the minute on new and really getting the referrals back to the dealer, but giving you that flexibility to do that whole search, whether that new car, the type of vehicle you're looking for, your price point, your transmission, etc. It's all there as you would expect from nothing less from Amazon when you're looking at it straight down to your look, feel, efficiency, performance, etc. So very slick in the way they've done it.
Yeah, very much so. And the key to this is that it supports the Skoda dealer network, because all inquiries are sent through, or you're presented with the preferred retailer in your location. So your nearest Skoda dealer will benefit from this, and then service the transaction, and also set up test drives, and then talk about part exchanges. So it looks as though it's very easy to use. And it should do well. And what will be interesting over time, I guess, is whether or not used cars will be introduced at some stage.
They are on there, Curtis.
Oh, they are.
The used cars are on there. Yeah.
Okay.
I'm, as we are speaking here, I am doing it. So yeah, you can go in. You can look at new or used cars. There are used cars on there. I'm just looking as we're speaking here at a Kodiak VRS, used Kodiak VRS. Currently, there are 10 available on Amazon to buy. It gives you the full price breakdown, gives you the option of obviously your mileage requirement, your price requirement, your monthly payment requirement. So yeah, they are on there. And obviously, as you said, Curtis, earlier, tells you where that vehicle is, and you can do comparisons between each of the vehicles. So similar to what you'd expect to see when you go onto a retailer's or a manufacturer's website, is there available on Amazon. So very, very slick in what they've done here.
Yeah, and I suspect we'll be seeing other VW Group brands appearing at some stage in the near future on Amazon.
We'll keep an eye on that one. So I'm sure there'll be a lot of other people that have probably missed this one that will be having a look now as we speak here. So yeah, that's big ones there to get through in terms of some of the headlines. Like we said earlier, we'll cover some of the winners and the shortlists from the AM Awards next week in a little bit more detail once everyone's recovered from their evening, and we'll get the results there. As we said at the start of the show, please do listen to the full interview there with Jeremy Yea on the details around what happened in the month of April, but more importantly, what he expects to see as we enter May and June. I'll be in Bergen in the rain, eating whale burgers and debating whether to have a fillet of reindeer or a leg of deer. Looks like that's what the menus are. But I won't be here next week, will I, Curtis?
No, and I hope you've got plenty of pocket money for this trip, because I suspect the cost of living in Norway is going to be probably slightly higher than the UK.
I was advised if I go into a pub to protect my pint.
Yes.
Because it'd be a high commodity sat in a pub with your pint in Bergen. So yeah, I've had that advice. But you are joined by our regular standing, aren't you?
Yes, indeed. So next week we've got Carl Davis sitting in for you. So looking forward to catching up with Carl and running through the headlines. So enjoy your holiday, Phil.
Yep, and good luck with the remote command there for you.
Yeah, thank you very much. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.